What's good, everybody? Welcome back to the channel. And if it's your first time checking me out, we basically talk about money almost exclusively on this channel. The type of money that you see scrolling on your screen right now. If any of that stuff's what you're into, go ahead and stick around for a while. Make yourself at home. Check out today's video and give me a chance to earn your attention. Now, in this particular video, we're going to be talking about real estate, and specifically the real estate crash, correction, pullback, whatever you want to call it, that is currently happening, that people have been in denial of for so long. So I've been calling for this for a while. The prices have just run through the roof for the last couple years, and what a lot of people tend to neglect is that even prior to the pandemic, we had a couple years of appreciation at a more normal pace before we got into this skyrocket that we've been at for the last couple years. But I kept saying it, I kept saying it, I kept saying it. Gravity is undefeated. And if you're watching this and you're in a market where you say, hey, prices aren't decreasing in my market, well, there's more markets where prices are decreasing than where prices aren't decreasing. So from a nationwide standpoint, we are experiencing a bubble bursting of sorts in the housing market in regards to real estate. Now, about a year ago, there was an article that kind of called this coming, where they saw trouble brewing in 50 markets, and they weren't too far off. They knew that at some point a pullback had to happen, but they just weren't sure when it was going to happen. But they knew it was going to happen. And more recently, our good friends here, I believe this is Bankrate, came up with this other article showing these 10 metros where there have been these huge price reductions, including places like Denver, Colorado, Sacramento, California, and Boise, Idaho, all classified as pandemic boom towns. That's a little term they came up with for these towns where the prices just went all the way into another stratosphere in such a short period of time. So just my take on it, guys. If appreciation in your area is typically 3-4% a year, 20 and 25 and 30% in 1 year, and 50 to 60% over a 2-year period, that's not normal, guys, and that is not going to hold. That would never hold. But many people were still in denial. So we're finally into an opportunity now for buyers to have a little bit more leverage to be able to jump back in. Gone are the days of the waiving contingencies and bidding against 12 other buyers and having to go so far above asking price and put down these huge earnest money deposits. That stuff's over. We have some factors that have led into this that are just, it's backed up by data, guys. We're out of that boom period. We're starting to pull back. The market is pulling back, and in some areas it is a bubble burst, because if you lose 20-30% of your value in a short period of time, that's a bubble bursting. So let's look at some of the reasons why the market is doing what it's doing right now. The first thing that we're going to look at is the effect of mortgage rates on home sales. So I have a chart up here that goes back several decades, and you'll see that way back when, in another really bad inflationary period in the late 1970s into the early 1980s, interest rates went all the way up into the teens, and this made the sale of new homes plummet. Now, let's keep in mind, in those days, housing was a lot less expensive than it is today. But as interest rates started to level off over the years, and it took a while, it took some years for it to really get back in check, you started to see home prices or home sales increase. So as we saw in the last few years, where interest rates hit historic lows, you saw home sales go to the point that they hadn't been in close to 20 years. When you factored in existing home sales with new home sales. But as interest rates have gone up, that's basically made the cost of getting the money more and more. And that's just knocked a lot of people out of the box, because the prices are so high that they just can't afford the home that they want at 5 and 6 and 7% interest rates that they could when interest rates were 3 and 4%. So this means prices have to come down because you can issue 1 billion pre-approval letters as a mortgage lender, but if no one's buying, it means nothing, and the banks aren't making money, no one's making money. So that's the first reason, is the interest rates are going to cause prices to continue to fall some. The next thing I want to look at is the cost as far as renting against buying. And this is also about 20 years of data. And you can see the bottom line being the cost to rent has kind of gone up at a nice, measured, steady pace, as you imagine it would. As time goes on, things become more expensive. Whereas the cost to buy, it is going way up and then going down with interest rates. So you kind of see it going through this roller coaster. Well, right now, the cost to lease is around $2,000. The cost to buy is closer to about $2,700. And that's just something that a lot of people can't absorb. They just can't afford it. And that is going to cause prices to come down, because some people are going to just say, well, hey, I can't really afford to buy right now. I was always taught buying is cheaper than renting, and you get the benefits of tax benefits and ownership. But if it's costing me so much more to buy, well, I might as well just rent for a while longer. So that, I think, also will push prices down. The last thing I want to look at is a good time to sell versus a good time to buy. Now, the green line is the time to sell. The blue line is the time to buy. And as you can see right now, it looks like the green line, which represents sellers, is still a great time to sell. Okay, and some people might say, well, it's a horrible time to buy. Well, that's all subjective. But right now, buyers have more leverage than they've had in a couple years, and that sell line is going to come down a bit more, because sellers are starting to realize that they do have to price their properties reasonably in order for them to sell, and they're probably not going to get these offers where all the contingencies are waived, no inspection, no appraisal, all of that craziness that's been going on the last couple of years. And on top of that, more and more buyers are asking for and receiving closing costs, assistance now, home warranties, and other things that they may need to make a deal work for them. Long story short, guys, gravity's undefeated. The market is coming down some. All right, so there's going to be opportunities for you to get in as a buyer, and there's also going to be opportunities for some people that want to finally get in as an investor. So hey, if you found value in that content, think about rewarding me with a like and a subscribe. And back to that investing thing. If you want to get in as an investor, here's a blueprint to invest in right here. And I'll see you guys in the next video.